Hi, I'm Tim Hogan, CEO of Commonwealth Capital here in Chicago. Thanks for tuning in. Well, we did it. We created the first ever utility that incubates quality deal flow for Wall Street IPOs. It is a long game. We took 3 years and close to $2 million and built the initial MVP 1 and MVP 2. Right now, we are currently in the process of raising an additional $5 million to continue with MVP 3 and beyond. We're not sure if we're going to actually need the full $5 million, so we may shut it off at any time. Certainly download the memorandum, read it, and feel free to contact us with any questions you might have. We're happy to answer any questions, but for the time being, I thought what I would do is just give you a little bit of history about the company and some of the stuff that's really not in the memorandum. So if you bear with me, I'll do that, and then afterwards I'll run you through the numbers and then introduce you to the management team. So to begin with, I spent the better part of 8 years on Wall Street with the major firms such as Merrill Lynch, E.F. Hutton, Shearson Lehman Brothers, and then I became a director of compliance for a small regional firm out of Michigan. And there I was the gatekeeper, so I knew what the gatekeepers to broker-dealers were looking to see as far as quality deal flow. The problem is the vast majority of deals that we saw were anything but quality deal flow. Now, what do you do with that? Well, the fiduciary duty with a broker-dealer lies with the investor side of the equation, not the entrepreneur. So we really couldn't legally say, put together a deal structure that makes sense and here's how you do it and so on and so forth. They really needed to figure it out on their own. Well, after a few years as a director of compliance for a broker-dealer, I left and I did some private deals myself. And I built securities offering documents and sold it in compliance with federal and state securities laws and built some pretty neat projects. And it all had to do with the deal structure. A lot of people don't understand what deal structuring is or what corporate engineering is in general. And so I'll hit on that just briefly. A proper deal structuring is setting up a deal that investors want to buy. They get more of a return with the risk involved in taking on the investment. Now, risk and return have all different types of elements, and you'll see by reading the memorandum how we've taken and hopefully mitigated the vast majority of financial, operational, and litigation or regulation risk while positioning the investors with a first lien security on assets, convertibility, a stated dividend, and preferred participation before conversion. It's all about the deal structure. Those who invest a certain amount of money can actually get a board seat, and with that they get additional share in the gross profits plus common stock in an ESOP plan. For those who invest early, there are early entry discounts as opposed to those who invest a little later, because everybody wants to be the last one in on a deal. Well, deal structuring is you set it up so everybody should want to be the first one in on the deal with the largest amounts of money because they get more benefits. So that's deal structuring. Corporate engineering is the development, implementation, and maintenance of all corporate governance policies, procedures, and protocols necessary to prepare and qualify a company and its securities for a publicly traded listing on a U.S. securities exchange. By doing so, you inherently prepare the company for the highest valuation for a private sale as well. You need all of these investor protections together to protect the investor, and the company itself has got to be a well-oiled machine. So as you'll see how we engineered our company, we engineer our portfolio companies the same way to mitigate operational, financial, and regulatory litigation risk. Also through our automated platform known as the Corporate Engineering Conservatory, we teach entrepreneurs how to properly engineer their company so that we can conduct another due diligence review to see if they're worthy to go into our venture capital fund. The Corporate Engineering Conservatory is evolving into a blockchain application. We are very serious about evolving our automated platform into blockchain applications. What we built as far as a company is the ability to filter deal flow very quickly. There's 7 levels of filtration. And I'm going to let the walkthrough video explain those 7 filtrations. Now, what we do as a firm is we trade services for convertible preferred stock that they issue, and we do it at a very low cost basis, so we immediately have an unrealized capital gain. We don't have any tax obligations coming out of the box, only if and when we sell that stock. And that's a huge percentage of our income is unrealized capital gains, because as a firm we own the fund. We own 100% of the fund. So this is a kind of an odd hybrid type of firm in that we don't own a piece of a fund, we own all of the fund internally. And you folks will own a piece of the management company that owns 100% of the fund. Hopefully that's kind of clear. Anyway, there are 273,000 startups a day worldwide. Now, we cater to the U.S. primarily. However, we can expand throughout the world. But we're going to take it slow, develop the U.S. markets first, then we'll expand appropriately to the rest of the world. We will get there. It'll take a little time, though. So I'll let the walkthrough video give you more of those basics. What I wanted to say is this. We built the Corporate Engineering Conservatory for something that I would want if I was an entrepreneur. And that's very important.